On Friday, nat gas prices fell below $2.35 after mild weather last week kept demand for the fuel low and allowed utilities to inject more gas into storage. The latest EIA report showed U.S. utilities added 104 billion cubic feet of gas into storage, in line with market expectations of a 104 BCF increase. However, it is important to note that the data included revisions related to the reclassification of some natural gas from working gas to base gas. Working gas represents the volume of gas available in the market. The EIA's reclassifications resulted in a decrease of 14 billion cubic feet in working gas stocks in the non-salt South Central region, implying a net increase of 118 billion cubic feet to working gas stocks for the week. Despite this setback, nat gas prices in the U.S. are on course for an over 5% weekly gain, recovering from 2 consecutive periods of losses in anticipation of increased demand from air conditioning usage amid forecasts for warmer weather. Over the short run, analysts predict an active weather system across the U.S., resulting in showers, thunderstorms, and mild to moderate temperatures. The number of cooling degree days in the coming 2 weeks is expected to rise to 167, above the 30-year normal of 149 CDDs. CDDs serve as an indicator of the demand for cooling based on the average temperature exceeding 65 degrees Fahrenheit or 18 degrees Celsius. On the demand side, nat gas consumption by the U.S. power sector is expected to rise from 31.8 to 38.3 BCF per day. Demand is expected to increase due to higher electricity production from air conditioning. Furthermore, there should be less gas available for winter storage. Prices could move up with higher demand. On the production side, new data indicates that production will remain relatively stagnant at 102.3 BCF per day this week, compared to 103 BCF per day last week. However, production is expected to edge up slightly to 102.4 BCF per day next week. Overall, considering the strength observed in power burns, the favorable warm weather forecast, and the reclassification of natural gas in the storage report, the gas market should find some support in the coming weeks. These factors combined contribute to a positive outlook for natural gas prices in the short term. Nat gas failed to overcome the 50-day moving average on Thursday and edged lower on Friday after crossing to the weak side of the pivot level at $2.35. Counter-trend bullish traders face a significant challenge in the form of the upcoming test. Will fresh buyers step in to bolster the market during this pullback? Should they do so, a secondary higher bottom will be established. Furthermore, if reclaiming the pivot generates sufficient upward momentum, there is a possibility of a near-term rally toward the $2.60 mark.